Welcome to the StockMatter.com studios here in the Black Hills of South Dakota. I'm your StockMatter Brian Johnson, making professional trading simple. And just a flat move in the markets today. Really didn't go anywhere. Finished down, and yes, we did kind of have a little bit of a move down there towards the end of the day, but I mean, it's a very little move down. Um, so nothing broken here from the bull side, and as long as it stays up in this area, it still remains, very short-term bullish on the markets. So we have not broken anything yet. And so once again, I said this weekend, if I was a big powerhouse machine, I'd probably keep this thing up there a little bit, scare the bears a little bit more, and see if I could get them to panic a little bit up in this area. So we may see still one more little push upwards, hitting that 10,500 area that we'll look at here now. On the daily, you can see us still up and above. Yep, still up and above the 50-day moving average, which is still, as long as it moves sideways, bullish in nature. Yes, as I said, I think I would have preferred it go up by the end of the day rather than sideways. So tomorrow will be another major day to watch in the markets today. So if you are bearish, you really would have been better off seeing a little up move here as opposed to this. This is consolidation. It can go either way at this point, and either way means that there's a 50-50 chance. I would have put more bearishness in a move up today rather than this sideways move. So we might still see a little poke to the upside. Maybe we consolidate today. Tomorrow, I talked about that, consolidating both Monday and Tuesday. Still on the table for me as a very potential scenario. A little move sideways tomorrow, and then another push to the upside. We might even close the week up, which would mean closing the month up by the time it's all said and done, if this thing just continues to slowly eke its way upwards. So continue to watch this. We are still above the 50-day, looking for a break of that. What was the low today? So right at just around the 50-day moving average. Yeah, really want to see it get back below 10,300. If you more conservative traders out there on the Dow, look for a break below that for your short entries. Here we have it again. On the NASDAQ, we kind of have this little line moving up, pulling back, moving up, moving down maybe. Maybe 1, 2, 3, 4, 5. I don't know. I can't count that. Doesn't make a difference. Really want to see a break below all of this, and that's below 1800 at this point. So break below 1800 gets us below all of this heavy support area in this here. So watch the Nasdaq for a break of that. Here on the daily, you can see us just gapping up. Had a really nice start to the day. I think it was up as much as 10 points, 11 points. I think I was watching the futures this morning. So a gap up and a move down all day, that is not so bullish in the overall. But what is bullish is the fact that it remains here in a little sideways base. That's just still putting in a high base looking formation. Any break up and over 1830 means more moves on the way to the 1840, 1850 area. Weekly, it's Monday, don't care about the weekly. SPX on a 60-minute here, you can see us basing sideways, staying above the 60-period moving average on this 60-minute chart. Once again, no commitment either way. Really want to break below 1100. That gets us below a lot of this support area here. So break below 1100 is what you're looking at if you're bearish. You want to see a really hard push down below that. That would ultimately be the best. Otherwise, any push up and over is still back to 1115 to 1118. That's my overhead area to be watching for. Next overhead resistance here, you can see it hanging up just like the other indices did. So this is a, yes, potential reversal candle. We do not know if we break up and over these levels. It was just a continuation pattern. So use the candles in the way they're meant to be used. This is not a reversal candle. This is a potential reversal candle. Treat it as such. SPX on a weekly, it's Monday, so I don't care. Moving on to the VIX on a daily, you can see continued drop in the VIX. Now, very, very little today, but it doesn't matter. A drop in the VIX is still a move downwards, which means no fear in the markets. Lots of it just pouring out. Look at that, day after day after day. No fear, no problem. Could be setting up if you want to look at this as maybe a bull flag, but I don't, do a lot of this stuff on the VIX. All I'm looking at is Is it going up or going down? Right now it is going down and has been staying in these stable levels, pretty much between the 20, whatever, 18 to 24 level has been a big hangout place for the VIX, showing once again no fear in the markets. Nobody's scared. Nobody's panicked. Apple on a 60-minute closing in on that 200. Did it dip below it today? Yeah, it did, down to 199.19. So for those of you that got short, it was a good entry. Look how it pulled back to the 50-period moving average, and now it's got the 200, the 20, the 50, and it's still doing all it can to stay in this little channel, which to me is still a big bear flag. So once again, watch for that break below 200. I still think that's a decent intraday, especially short at this point. From a daily standpoint, let it get, notice how it tagged the 20-day moving average down here. It's got to get below that. Ultimately, more conservative traders should wait for a break below 198 to play it down to 194 and then maybe lower from that point. On a weekly, it's Monday, so I don't care. AINV on a 60-minute here, you can see this one moved up very, very nicely. Got the break up and over this overhead resistance level. This was my period to go long here. This is my mark to go long over here. So up over 1140, made you a little bit of money today. If you held, I'd continue to hold. This still looks a little bullish to me, actually. So if you held, go ahead. That's great. I probably would have been looking to take profits on an intraday standpoint, but if you want to hold a little bit longer, okay, watch these overhead resistance levels, set your stops accordingly. But like how it held up here at the high point, it had one of two directions. It was either down or up. And today we broke that 1140. That was your signal. Go long. BJRI on a 60-minute, also hanging within this rising wedge, waiting for a break up and over 2150 to maybe get long this again. If not, watch for a break of this wedge pattern. That would make for a really decent entry on a short. As you can see here, we've been trailing this line up. So I still like the potential to get up and over this area and push up a little bit, but I am certainly not opposed to getting short this below about 21. More conservative traders, you want to wait till it gets below maybe the 50-day moving average, because that'll be right about the $20.40 mark. That'll be a really good entry to the short side, but there's still potential to get up and over this area. So watch this closely. You have a good tweener stock, and that means it's right in between a short and a long. So you've got an opportunity to play this either direction. Watch that one carefully coming in the next 2 days. CYBS on a 60-minute, still in this trading range. No break above, no break below, so no trade today. Let this one form. Same thing. Notice here on a daily how we came up, found really nice overhead resistance here, and today it worked out beautifully as it fell to the downside. FAS on a 60. This one I think I called over 73.50 for the more aggressive traders. Play it up to about 75, and then I would have been looking to take some profits or move stops up. What was the high today? 76. So you could have played it up over from 73.50 to 75, and then up over 75 was my next area to play this on an intraday basis. So you could have pulled at least, even on an entry over 75, you could have pulled 50, 60, 70 cents out of this, which isn't a bad move, but 73.50 was a pretty good move on this to get aggressive, very aggressive, to get up and over this area. Now that it's holding here, my next area is still watch it up and over 75. Maybe we get a little bit more of play to the upside, but I'm telling you, it's very stretched where it's at. I'd be very, very careful playing FAS and FAZ over the next couple days. FAZ on a 60-minute means it's falling, but you see here a potential reversal candle. So up and over 18 might be a very aggressive long play from an intraday standpoint. Intraday, I would be very careful playing this, as I said, either direction. I just don't think it's setting up well in either case. So over $18 and maybe 30 cents is a little bit more less aggressive long play on FAZ, but there's no setup here quite yet for me. Notice how it did tag this lower support line, so this made for a half-decent opportunity at least if you wanted to take a very speculative play in this. Could have taken it off a bounce down here, made a little bit of cash on it, but boy, that's just playing with fire, catching a falling knife. You hear it all the time. This is exactly what this means. If you're trying to go long FAZ, you're just trying to catch a falling knife. And in most cases, you're going to get stabbed. All right, so very short video today. Nothing to talk about. Why? Because we went Nowhere. That's why. I'll be back with you again tomorrow night. Hopefully, once again, we're gonna get. Hopefully, we'll see some movement. Like I said, was not surprised to see a little bit of consolidation today. If you're bearish, that's not what you want to see. You want to see this thing really start to make some sort of major move to the downside, and if nothing else, start to break some more major support levels. We're just not seeing it right now. So everything's holding up nicely. No reason to think we can't squeeze maybe a few more points to the upside for the bulls. I personally am still not necessarily looking to go long this market on the indices. Individual stocks, yes. Indices, no. Very overstretched here. I'm going to wait, conserve, and save my money. And I would suggest that you do the same. So take care of your money, and we will see you back here again tomorrow night. Bye.